Welcome back, ladies and gentlemen, for another YouTube video. Allincrypto here, and today we are going to be delivering a jam-packed daily cryptocurrency market update. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets, and that's exactly what we're going to be doing in this video. And I am not exaggerating when I say that we have a hell of a lot to cover. We are going to be starting off by looking at the fact that we are seeing some of the biggest inflows into digital asset funds in almost 2 years. Then we'll take a quick look at the Bitcoin chart. We're going to be looking at yearly hodlers for Bitcoin because there is a correlation here between bull and bear markets. And then we're going to be diving into the dollar and this kind of potential risk on period that we've looked at, that it's going to be anchored around the dollar actually softening. We have seen progression in a number of asset classes like precious metals, like, of course, crypto, Bitcoin. We are potentially going to be looking at a turning for the stock market. It's going to turn anywhere, guys. It's going to be here. You're going to, in some cases, have had a pretty much perfect retest. We teach something called stage analysis, which looks for this. And then we're going to be on that topic looking at obviously what came out of the Bank of Japan yesterday with their sort of yield curve controls, and technically looking at this in regards to where the dollar against the Japanese yen is, because this fundamental news always comes around key technical levels, and technical analysis absolutely is the footprints in the sand. And anybody who truly has studied technical analysis over a long enough time period would have seen this. And then we're going to be talking about Eurozone inflation, Dutch inflation, we're seeing real deflation, and then we're going to finish things off with looking at how the United States, the US Treasury, is expected to borrow $1.6 trillion in new debt during the next 6-month period. So they're doing quantitative tightening, but they're also doing quantitative easing. And actually, in the book that I'm writing, that hopefully we can get out for you by the end of November, we actually look at the history of money, and we look at money itself in regards to the current fiat forms and how it works and this kind of debt-based accounting system. So we have a lot to get into. Let's kick things off by going over and taking a look at our website, allincrypto.com, where we're publishing so much in the way of news. You know, you guys, if you come over, we've just launched a newsletter, which is not intrusive at all. We're not trying to sell you anything. It just keeps you up to date with the latest articles. Very easy Sunday read. But we actually published an article yesterday where we looked at CoinShares digital funds, digital asset funds, and that we saw pretty much the biggest uptick in regards to inflows. It was $326 million. The biggest uptick in inflows since July 2022. This is a sign. Now, there's undoubtedly going to be quite a bit of ETF, Bitcoin spot ETF news in this, and this is why we've really seen Bitcoin move. But we also saw big inflows into the likes of Solana. And we have been highlighting Solana for a while now. We even looked at it as a trade. Unfortunately, I got stopped out right at the bottom, only for it to be, 100+% up. That would have been a annual salary for most people if I had managed to get that off the ground. But that's the game. That's the way the game goes, unfortunately. So this is a very positive sign. You guys will know that we've taken a bullish stance on the market since down here. And ultimately, we've been accumulating altcoins since then. And if you guys want to find out what I'm buying, where I'm buying, it's not too late to get on this train, guys. Please do consider becoming a Patreon. You'll get access instantly to my portfolio. We also had a fantastic chat with somebody who's very in the know of all sorts of topics yesterday on the crypto space, and actually a crypto in specific. But that's enough of me shamelessly promoting. We have absolutely assessed that we think the bull market is here. Okay, we assessed a fundamental end to Bitcoin's downtrend that was accompanied with a number of things like the broader context of the markets and what we think is ultimately going to play out. We fundamentally have disagreed with the bears on timing of a crash. That is pretty much it. And what happens in regards to if the crash isn't taking place now, historically, what's the context of what do the markets do into a crash that comes later on? They typically rally, and you can look at this historically in regards to the S&P in relation to rates. The yield curve, you name it, everything sort of points to the same direction. And also, we're seeing a hell of a lot of news in regards to stimulus. We looked at Larry Fink's comments where he sort of agreed with us and says, look, we don't think something's coming. And I know people say, oh, you can't trust Larry Fink. You can't trust him on his positions, but you can trust him, I believe, on his economic forecasts. He is the largest manager of the largest asset fund in the world. you know, he's got there for a reason. And whether publicly he lies is to be debated. I'm not saying that you can trust Larry Fink. Shouldn't have raised it like that. But we're seeing a lot of stimulus coming in. He mentioned that in regards to the biggest non-wartime or crisis stimulus ever. And that's before the Treasury's report came out and said that they're expected to add $1.6 trillion of new debt during the next 6 months. The end of the fiat systems is coming. But I think they're going to look for something to blame, and maybe just a little bit of speculation here. They use crypto if they can allow it to have a massive bull run, everyone pumps into it, and then they maybe artificially crash it. Who knows? This is all forward speculation. But this was quite interesting. The Northern posted this, and you can see the correlation here between bull market tops with low yearly hodlers. They typically are smarter money, and they get out the market, and then you see a climb of hodlers that kind of preempts the bull run. And then, of course, you know, you see a continued climb, which I found quite interesting. A little bit of correlation there. Let's move on now, guys. We have been looking at a potential dollar falling that was based on this candle here on the 2nd of October, which started the candle. And it's been a little bit strong, a little bit more stubborn than expected. I think this has a lot to do with other countries and the kind of data that they're getting. But you can see we were in a bear market that was really pressured by the dollar and, of course, monetary policy. And then the dollar peaked out, and so did the markets in regards to their downtrend. Crypto didn't because of FTX. We're actually quite lucky that FTX happened. Otherwise, perhaps we may have missed the bottom. You know, we were still out of the market then and only got in at the start of this year. And since then, you've seen, with the dollar weakness, risk on have a real bid. And then with the rise of inflation, which we're going to talk about in just a second, you've seen the dollar gain a bit more strength as an uncertainty trend. Remember, you can get right now 5% on your dollars just from having them in a bank account, when the S&P's annual return historically over time is about 9%. So interesting dynamic that the markets have got to contend with. But we saw this kind of inflationary fear rise for the dollar. And of course, Bitcoin ran into 30K. It stalled, you know, which actually worked out in our favor. There's always silver linings and things, guys. And of course, risk typically took a bit of a dive. And then on Friday's close, or Sunday's close, sorry, we looked at the dollar. It would have been Friday's close. We looked at the dollar and we said, okay, this might be turning. This is a shooting star after a very aggressive uptrend. Is this going to see a period of risk on? And since then, you saw an attempt to cross the board. Unfortunately, though, debt and the property market, which we've spoken about previously, how you've got lots of inflows into large dated or long dated treasuries, which is interesting. You know, they've all started to get a bit of a bid. Bitcoin and gold have really extended it. And then, of course, with earnings and stuff, the stock market has come down somewhat. So I actually I'm looking now at, technically we've got a bit of a sign, but fundamentally we're going to talk about how there's actually a lot going against the dollar strength, which we're going to talk about. But just to quieten the chart down and just to put the S&P with the dollar on, if the dollar now rolls and we get this risk on period, that is largely going to support the S&P, which currently, and we're going to go over to the S&P chart, I believe is at a key technical level for a bounce. You know, I looked at this with my Patreons on Sunday's meeting. We do a meeting every Sunday. You never had a proper retest of this breakout, and you typically always do. If you look across the board at stocks, it's not overly strong. Tesla, perhaps not so much. But you can certainly see the potential for some, you know, Microsoft hit our target. It's been resting since. It now looks to be sort of breaking out. Turning points for the stock market. If it's going to turn anywhere, guys, it's going to be here. You know, if we're looking at this across the board, Amazon actually we think is likely in a head and shoulders. This is going to be a weak shoulder. We ultimately think you're going to have probably a full-blown bull market before the crash takes place. That's my genuine thought, and I've had that opinion since the start of the year, and we've been very right on it in regards to the direction of the market. Will we continue to be right? We'll see. We could be absolutely 100% wrong, and we'll hold our hands up and say that. But of course, for me, it's all about making money from our investments, and we want you guys to win. And we try and deliver the most genuine content that we possibly can, and we really appreciate any support that we get. Please like, comment, and share this around in your crypto communities. You know, let me know if you think the information that I'm putting out here is wrong. Tell me why, and we'll reply also in the comment section. So going back to the dollar strength and finishing off that the stock market looks like it may want to sort of going towards dollar strength. weakening, be at a key point. You know, we need to see this roll, and we've not seen it yet. It's been a little bit stronger than expected. Where's the dollar? Put it on auto. But I'd like to see this roll. We've got to see it. But if this does roll, and there may be fundamental news for this. Yesterday, we had the Bank of Japan increase flexibility on yield curve controls, meaning they're essentially going to let them rise somewhat. The yield, that is, thus strengthening the yen at a point where the dollar against the Japanese yen, remember, Dixie is made up of a basket, the yen is one of them. You may see, you know, this take place, which is going to equate with the dollar also rolling. That could be a fundamental thing that's happening it's funny how this stuff comes out at a key level of significance. Also, we're getting inflation data today for the Eurozone. Eurozone inflation drops to a 2-year low in October. Economy shrinks in third quarter. So you're getting a deflation across the board, including, we've drawn all over this now, oil. People aren't paying attention to oil. They only want to bring it up when it suits them. If oil continues, although I would say oil's broken out and it's likely going to go higher. And at what point am I wrong? Well, I'd say I'm wrong here if you invalidate that low. Oil's coming off a bit. We're seeing inflation sort of dampen across the board somewhat. Although a lot of sort of metrics that I look at, you know, this is wheat and other things, you know, look pretty good. Oil's coming off a bit, which may support dollar weakness also. So there's a number of things that are making us think the dollar may look a little bit weak. This is Dutch inflation. They're doing really well. So we'll see. See what happens for the dollar. The dollar rolls, you're going to get full risk on. You've got stocks at key levels. You've got Bitcoin already potentially preempting that, getting a nice little bid with it with the ETF news. Some of our altcoins are flying. You know, we are starting to really look at the portfolio we've got with a real... we've always had a positive attitude, but it's really starting to look very well positioned. And then, of course, to finish things off, you've got Lynn Alden. The Treasury expected to borrow 1.6 trillion in new debt. This is inflationary for their system, which is a debt-based system, thus the dollar debasement. If you look at, and we've done this, I really shouldn't be doing this again, but let's look at the... no, we don't want deposits with the Treasury. We could use deposits with the Treasury. Let's not do that. Let's just look at the Fed's balance sheet. And we know that they aren't going to be buying the Treasuries, I don't think. But this is the Fed's balance sheet. There's a number of ways we can look at this. And what is this on? Log. Take it off log. And this is the stock market. So this is really debt added and buying. And look at the stock market's correlated. So this will have to turn. It's no coincidence the market's all rallied here. This obviously had to do with Silicon Valley Bank and a number of other things. We're getting really deep into it, and I don't want to do that. But with the issuance of more debt, you're thus devaluing the system. And this is the inevitability. I have very much pivoted on my views of Bitcoin in regards to the fact that I've always been of this opinion that technology evolves and that Bitcoin isn't going to be the winner. However, money is an ideology, and Bitcoin is not really... It's a crypto, but it's not doing what the majority of cryptos are trying to do. It's something very separate and special. And the technological capabilities of it, i.e. throughput, transactions, block size, all this sort of stuff, don't matter that much, because what's the transactions of gold? You know, it's a physical transaction. It's even worse than Bitcoin. It's not global, transportable, so on and so forth. It's all about the ideology. And Bitcoin has been nothing short of a success thus far and will continue to be so. And what's the value of a system to hedge the system that is corrupt, manipulated, and used to enslave the masses? I don't want to go too far down that rabbit hole. I actually did speak about that in my Patreon in regards to left and right and this sort of stuff. But, you know, that's not really stuff I want to infringe on anybody. I understand that everyone's got their own beliefs, and they've come to a conclusion with how they've synthesized life throughout their years, and they identify with whatever it is and feel strongly about that. And that's people's own opinion, in my opinion, and I'm glad you have it, because if we all thought the same thing, it'd be a boring world, and we'd be in SCO, which of course is the party that George Orwell spoke about in 1984, which of course was the lead on from British socialism, which Frederick Hayek also wrote about. You know, his book, The Road to Serfdom, was targeted at the Fabian socialists in the United Kingdom. We're getting all over the shop. To bring things back, guys, We're seeing really positive signs across the board, technically, fundamentally, with inflows, you name it, on chain, everything. We're looking for the dollar to roll. This is going to support risk markets, which we identify as crypto, stock market, precious metals, debt broadly, and the equity space. And we're potentially looking and have fundamental reasons to see a little bit of dollar weakness, at least for a time period. Markets may do well under that sort of set of circumstances. And we're seeing lots of inflation to the debt-based system. All pointing towards our kind of overall thesis that's backed up by what happens with rates. The markets are actually going to do quite well looking at that correlation. So that's all I've got for you guys. If you have enjoyed this content, a like is appreciated. So as a comment, don't forget to like, comment, and subscribe, and share this video around, guys. If you've got social media platforms, get it on there. And yeah, that's all we've got for you guys. Have a triumphant Tuesday, and I'll see you all in the next one. Thanks for watching. Catch you in the next.